Hey everyone, welcome to the first edition of the Bitcoin Fundamentals Report. And in this edition, I'm going to be looking at the recent quote unquote disappointing price action. We're going to be kind of putting that into context by looking at some of Bitcoin's fundamental long-term trends. And then we're going to be taking a look at some of the most bullish fundamental indicators, including the growing computing power on the Bitcoin network and looking at hash rate and comparing it to some of the AI data centers that we have and kind of seeing the gargantuan power that the Bitcoin network has. Um, and then we're also going to be looking at a couple of portfolio comparisons, which I think are really interesting and just show you the power of just including even a small amount of Bitcoin in your portfolio long term. Um, and maybe a couple of other things as well. But before I dive in, just to let you know that I am not an investment expert. I'm not a finance expert at all. I'm just somebody who is a tech nerd, and I'm super interested in Bitcoin, and I enjoy looking at data and studying information systems and stuff like that. Um, and then also the Bitcoin Fundamentals Report. What I do here is I like to explore the growth of the Bitcoin network, and we look at sort of long-term trends and things like that. Um, there's no sort of macroeconomic nonsense. There's no on-chain, confusing on-chain metrics, just kind of data that matters. All right, so with that said, let's pull up the dashboard here. And the first thing I notice is that, this month so far, the average hash rate has been 1.3 exahashes, you can see here. And that is just an absolutely gargantuan amount of hash power on the network currently. And we'll be looking at a couple of metrics to really put that into context in a bit. The price is sitting right around 110, 111,000. Um, and yeah, so let's kind of dive in. Let's start with price. Okay, so let's start with everybody's favorite pricing model, which is the power law. So if you're not familiar with this model, it's actually probably the one of the simplest pricing models for Bitcoin, and it's very robust. So all it is fitting a power law trend line to the Bitcoin price. And I've got this on a log chart, so the y-axis is in log terms. And as you can see, this is an incredibly good fit for the price. Going back, all the way to kind of Bitcoin's inception, the price has sort of been oscillating around this red line here, which is the trend line. As you can see, there's been times where we've really gotten overheated, we've gotten way above. There's been times when we've gone way below, but we always sort of come back to this trend line. And this model, the reason this model is so simple is because it only has a single parameter, and that's time. So essentially, you can look at the days since the Bitcoin network was created. You can also look at the number of blocks that have passed. There's slightly different ways of doing it. I'm looking at days since inception here. And yeah, so I mean, the first thing that you notice is that volatility has been really dampened for quite a while here. Previous cycles, we've gone way above this trend line. We've also had times where we've gone quite a bit below it. But lately, we've kind of just hovered around it, sort of oscillated a little bit up and down, but basically sticking to this line. Um, so the first thing that tells me is that we're kind of just following the trend. Um, Nothing out of the ordinary, really, other than slightly lower volatility, which maybe we can attribute to, Bitcoin's growing market cap and some of the institutional products that have come out in the space. I don't really know. But as far as the long-term trend goes, we're holding steady. There's nothing really different. There's nothing that worries me here at all. Um, so yeah, and to kind of illustrate this, let's put on the standard deviation bands here. So I've got the upper and lower standard deviations here, and I think this just highlights just how little volatility we've really had. For a little while now, sort of beginning of 2024-ish, we haven't even got up to one standard deviation or even below the line at one standard deviation. So yeah, whereas previous cycles, we've gone all the way up to two standard deviations, sometimes even above that. So that's quite interesting. That also tells me we have a lot of room for volatility to return here. We might see, we might see the price going back up. If we go one standard deviation, we're looking at about 200,000. A lot of people have been predicting 200K for Bitcoin this year, otherwise possibly next year. That's very possible. Wouldn't be anything out of the ordinary. But again, we could have volatility to the downside possibly as well. And if we're going one standard deviation below, we're looking at about 60,000. So I can't even imagine how bearish people would be at that level. But again, it wouldn't be anything out of the ordinary. So something to keep in mind. But yeah, right now we're pretty much dead on the trend line. So nothing crazy. Price may feel disappointing, but just remember we're following that long-term trend. So nothing has really changed in terms of fundamentals. Okay, so let's carry on here. Let's have a look at the Pi cycle top indicator. This is kind of an indicator of Bitcoin tops. And what you have here is the red line, which is the 111-day moving average of the Bitcoin price, and the green line, which is a 350-day moving average multiplied by 2. And you can see where these lines cross is generally where Bitcoin tops. So you can see that multiple times in Bitcoin's history, we've had these lines cross, and that's exactly where Bitcoin has topped. So again, looking at where we are currently, nowhere near a top, according to this model. So you can actually see the red and green lines are fairly far apart here. You can see the current price is sort of bounced off this 111-day moving average. And yeah, so I think this is just another model which is telling us the same thing, which is that, Bitcoin has a lot of potential to explode in price. And there's no indication here that we've hit a top or anything like that. All right, so moving on, let's take a look at this 2-year moving average indicator. So the red line here is the 2-year moving average. The green line is the 2-year moving average multiplied by 5. And the idea with this indicator is that when the price goes below the 2-year moving average, that's sort of a sign that things are oversold. When the price goes above the green line, that's a sign that things are overbought. So again, if we look at where we are now, we're sort of closer to the red line than the green line. But we're not in either sort of oversold or overbought territory, according to this indicator anyway. Um, and if we look at where the 2-year moving average is sitting, it's at around 77,000. So, I'm absolutely not a technical analyst or a financial expert or anything like that. Don't take any investment advice from me. But if somebody were to ask me where is the bottom, I would say, yeah, maybe on this 2-year moving average. Like, I think if we were to kind of cascade downwards and see like a lot of volatility to the downside, we could potentially get down here, 77,000. I know some analysts in the space have been talking about um, these kind of key support levels for the Bitcoin price. And like if we go below 100K, we're probably going to go lower to like 80K. So that would line up pretty well with this 77,000 2-year moving average. But again, that's not really uncommon. We've hit those levels before. We tend to sort of hit them or go below them a bit and then come right back up. So I would guess that that would probably be a fantastic buying opportunity if we were to get close. But we'll see. Okay, so let's continue. I just want to quickly look at the 200-day moving average chart here. And just highlight, there's been times where we've gone below the 200-day moving average, including recently. We sort of just dipped below it briefly. But usually when we do, we seem to bounce back pretty hard. Like you can see here, even in Bitcoin's sort of early history, we've gone below it. Then we've like rallied above, we've gone below, we've rallied really hard, gone below it, rallied really hard again. And that seems to be sort of a trend, so dipping below it and then price sort of explodes upwards. So I thought that was interesting. And let's take a look at let's put this back to just a couple of years ago. So yeah, I think this shows it nicely. You can see here we sort of dipped below, and then we had a really nice price explosion. We dipped below again in April, and the price came shooting back up. And we've just recently dipped below it in sort of middle of October. And it looks like we've started to rebound a little bit, which is interesting. So we'll see if this is followed by another sort of rally. I have no idea. I'm just looking at the trend. We could also sort of dip below it again and go quite a bit below before we come back up. But I think the long-term sort of trend is like if we do dip below it, we tend to come back up pretty hard. So that's reassuring. Okay, so let's quickly take a look at the market signals. All right, so let's look at the price to hash ratio here. So I think this is a really interesting indicator. This is just the Bitcoin price divided by the hash rate. And then I have the price overlaid here, this red dotted line. So what I wanted to highlight here is that you can see in the past, when the prices run up, it's really run really quickly, and the hash rate hasn't really kept up. So this ratio has spiked up, like here in 2017. It happened again in 2021, where the price ran up massively and the hash rate didn't really move too much. And we see these peaks here. Recently, you can see the price has run up, but we haven't had a spike in the price to hash ratio. And I would actually say this is quite a healthy sign because it means the hash rate is moving up with the price. And so we're building a stronger and more secure network, as the price continues to rise. Um, but it also tells us that we haven't had any really crazy, like um, frothy tops or anything like that. Because when we do have those like very speculative phases where everyone's piling in and the price goes vertical, we tend to see the price sort of run up faster than the hash rate, and we get these spikes. We haven't had that at all here. So it just underscores the kind of dampened volatility, but I think it's also a healthy sign as well. So talking about hash rate, let's move on to mining. So I think this is possibly the most bullish chart in all of Bitcoin currently. This is the hash rate chart. And if anyone is sort of unfamiliar with hash rate or doesn't quite understand what it is, essentially it's just the number of hashes being computed on the network per second. Um, and what Bitcoin miners do is to find new blocks, they have to compute these hashes. And then the hashes that they find need to satisfy certain constraints. And those constraints change depending on the amount of mining happening on the network. And that's called the difficulty adjustment. And that ensures that we get blocks coming out every 10 minutes on average. Um, so the more computing power on the network, the more hashes that are being computed, and the higher the hash rate. So why is this so important? Well, hash rate is important for network security. So don't get me wrong, decentralization is extremely important. But the amount of computing power on the network is also important because it sort of makes it very difficult for anyone to even think of attacking the network or trying to commandeer the blockchain in any way, because the amount of computing power they would need would just be so ridiculously large that it wouldn't even be financially feasible to do it. So we want to see the hash rate growing. We want to see it very high, because that improves network security. It also shows that miners are choosing to mine on the Bitcoin network and not going anywhere else, right? That's very important as well. So to put this in perspective, I've also put the Dogecoin hash rate on this chart. You can see it way down here at 4,000, right? So this chart is in terahashes per second. Dogecoin, I've been generous and I've put 4,000. It's actually, I think right now it's actually below that. Bitcoin network, on the other hand, we're sitting at like these are averages, so 1.1, 1.2 zettahashes per second. So this is like 1.1, 1.2 billion terahashes per second. So, as you can see, Bitcoin and Dogecoin not even in the same universe when it comes to hash rate and network power. And why is that significant? Well, it's significant because Dogecoin is the second largest proof of work cryptocurrency by market cap. So let that sink in. The second largest cryptocurrency that uses proof of work by market cap has a network power, a hash rate, and a security level that is infinitesimally small compared to Bitcoin's, right? So when people say stuff like, Bitcoin has too many competitors, or, you need to diversify into other cryptos, that's just complete nonsense. Because Bitcoin is not even in the same universe as these other coins, right? As you can see. So, if anyone's interested, I got the Dogecoin hash rate from this website here, Coin Wars. Um, and like I was saying, currently, right now, it's actually sitting at about 2.3 petahashes, which is 2,300 terahashes. So I've been quite generous by putting it at 4,000. But either way, it's not even in the same universe as Bitcoin. Okay, so to really underscore this point, I want to go to this chart. And I think this is really interesting. So what I've done here is I've put the Bitcoin hash rate on a log chart. That's the black line. And then I fit a trend line to that line, an exponential trend line in green. And you can see in the early days, the hash rate was increasing much quicker than exponential. But recently, it's sort of settled into a typical exponential curve. Um, and then this red line is Moore's law. So Moore's law says computing power doubles every 2 years. Um, and that's also an exponential function. You can see here on the log chart, the fact that these lines are diverging means that the hash rate is growing quicker than Moore's law, quite a bit quicker, actually. So again, just putting it into perspective, putting it into context, the Bitcoin hash rate absolutely gargantuan, and it is growing at a very fast rate, much faster than the rate of innovation in computing power. And then again, just to to do another comparison here, so all of you really understand the power of this network. I wanted to, there's been a lot of spending, like crazy amounts of spending on AI infrastructure. And the hot thing now is AI and data centers and like all these like VCs are talking about tiling the earth in computing power to power all these super intelligent AIs and all this kind of stuff. So I wanted to compare the world's largest and most powerful data center, AI data center, to the Bitcoin network. So currently the biggest and most powerful AI data center is Tesla's Colossus. It's also been called an AI supercomputer, and its main function is AI training. Its power consumption is about 0.3 gigawatts, and the number of chips that it has is about 200,000 NVIDIA GPUs. So these are the main sort of chips they use for training AIs. So if we compare that to the Bitcoin network, what is the Bitcoin network? It's the world's largest computing network. Its main function is securing the Bitcoin network, right? Its power consumption, we don't know completely, but estimates put it at about 26 gigawatts currently. It could be higher than that. That's about 86 times larger than the Tesla Colossus. And if we look at number of chips on the network, again, we don't know exactly because the network is decentralized. We can't actually count the number of computers, the number of ASICs running on the network. ASIC is just a specialized computer that's been built specifically for doing hash functions. Um, but again, we can estimate it maybe around 6 million. Could be more than that. But that's sort of a conservative estimate. for what it might have. And we can estimate that by looking at the hash rate of the network and then looking at sort of the average hash rate of an ASIC miner. So again, Bitcoin is playing in a different league than these AI data centers, and it is growing extremely fast. So I have a lot more to say on this topic because I think it's extremely interesting. Everyone is so caught up with the AI build out that they're not even paying attention to the Bitcoin build out. Um, but I'm going to leave that for a future edition. And for now, I'm going to move on to portfolios. Okay, so I'm still building out this part of the dashboard. I have a lot more data to put in here and to go through, and I think it's going to be really interesting. But I just thought, for this first edition, let's just compare a couple of classic investment portfolios against a very conservative Bitcoin allocation and kind of see how they do, how they perform over time. Just to put Bitcoin's sort of long-term growth potential in context, in an investment context. So what I've done here is I've computed a few sort of classic investment portfolios. We've got the 60/40 in black here. We've got a stocks only portfolio in green. And then we've got the Boglehead three fund portfolio here in blue. And then what I've done is I've computed a very conservative Bitcoin allocation here. I've taken the 60/40 and I've taken 2% from the 40 and I've put that into Bitcoin. And I've just plotted them all on a chart looking back about 10 years. So what you can see here is that the 60/40 does the worst. The three fund portfolio marginally uh, beats the 60/40, just a slight increase there. The very conservative Bitcoin allocation actually completely eclipses both of those portfolios in terms of returns. And it is itself beaten by the 100% stocks portfolio, which makes sense, right? We're only adding a 2% Bitcoin allocation. It's extremely conservative. Meanwhile, stocks have done very, very well over the last decade or so. So to expect that to outperform. But I just thought it's interesting to kind of look at the kind of portfolio uplift you could possibly get just by having a very small allocation to Bitcoin. Again, past performance is obviously not an indication of future results, but if we do look at the sort of long-term trends, some of the things that I went through today, uh, we can be fairly certain that, price growth will continue along that power law curve. At least there doesn't seem to be any sort of fundamental reason why that shouldn't be the case. All right. Well, I think that does it for this first edition of the Bitcoin Fundamentals Report. If you found this interesting, you can subscribe here. It's completely free. Every week I put out a video update like this, together with a written report with all the charts and things that I've gone through. And again, this is just me exploring Bitcoin's fundamentals. I don't like listening to all the macroeconomic mumbo jumbo. I don't really like a lot of the on-chain stuff because I just find the metrics so confusing and I don't know, not all that helpful. So I thought let's look at fundamentals. The data is simple, easy to understand, and I think it tells us more about Bitcoin's sort of long-term growth trajectory and the health of the network. So if you're interested, please subscribe, and I'll see you in the next one.